Hi and welcome to the Market Alert for Friday the 11th of March. So yesterday morning the bull struck back, but when do you fade it? I.e. when do you sell into it? Well, that's quite simple, isn't it? Because yesterday we saw that the ceasefire faded and the hopes crumbled. No surprise there, is there? I mean, again, it's like I've said all week, they keep putting this out. And it's just a way of bringing the market up. There's no real foundation behind any of it. It's just pure propaganda. We know that, as we've seen all week, and I've spoken about it. And that's the way it's going to continue as well until Putin actually waves a white flag. It's not going to end. It's as simple as that. Bonds, cryptos and stocks crumble as global financial conditions tighten drastically. Absolutely. It's starting to get quite interesting now, as we heading towards a financial Armageddon, frankly. And the ECB, just the insanity of this, turns hawkish, means it's going to raise rates just as it warns of sharply higher inflation and slower growth. It's as if they're hell-bent on destroying the financial system now. ECB hawkish surprise sends EU bonds yield soaring. It's either this or it comes back to the World Economic Forum of the reset, and I don't mean just the reset of psychology of people that they've been trying to implement, but also the financial reset of the system as well. And there's something interesting coming with regards to the metals, which we'll talk about in just a moment. More insanity. Another 1.5 trillion spending bill was passed, and 13.6 billion, a drop in the ocean, is being sent to Ukraine. They keep doing this in the Democrats in the US. They keep saying, oh, well, we're going to give the money to this and to that and whatever. And they just keep getting it through because they've got the control at the moment. It's just insane. Insane. I've lost count now. There's just simply, I've no idea. I have no idea how much they printed. I know they printed 9 trillion in 2020, and they printed another, I think it was 4 trillion in 2021, and this is the start of this year. We're up to 1.5 trillion already. This is just to keep the illusion alive that everything's fine. This is a very interesting article that the US tees up to stop Russian gold debt, triggering the LBMA and COMEX to eject Russian refiners. And this actually subhead is the only one I'm going to read. If our gold and foreign currency reserves were ever seized, even if it was just an intention to do so, that would amount to financial terrorism. It would amount to a declaration of financial war. So actually squeezing the Russians out of the gold market and the silver market is bad news. And we're going to see a real end, a catastrophic end to the COMEX and to the LBMA if this bites. It's just, again, it's insane. It's no different than stopping the oil coming when there's only 28% of Russian oil exported. We're going to pay the price for this as we see electricity and gas go up. But to actually do this with the gold and silver is a bit of a tricky one. So we could see a situation where the COMEX call for a force majeure, which means that they say, sorry, we're not trading gold and silver on the COMEX anymore, because this could actually encourage a lot of other countries to actually start buying up gold and silver, which they have been doing anyway. You have to look at a gold graph of central bank reserves from 2010, where they've been accumulating tons of it every year, knowing full well that after the Nixon removal of the gold standard on the 25th of August 1971, it was going to end badly at some point. We're now 51 years into this fiat currency that is just pure debt-based system. But this is an interesting one. This is after the blow-up of the nickel trade the other day, where it went up 250%. What is to stop silver going up by this sort of level? We are 50% cheaper than 1979 high, and we've got inflation absolutely pouring out of our ears. And yesterday's CPI numbers as well, which I forgot to include in here, show at the highest rate for 40 years, and silver is $25. So if you don't believe there's manipulation, then you need to get your head checked, because it's blatant. It's absolutely blatant. How can you have one commodity in the whole world, one commodity, silver, that is used in solar panels, cars, batteries, etc., all of your electrical goods? The best conductor of electricity in the world is 50% cheaper than it was in 1979. It is suppressed, and it's suppressed for one reason, because the Bank of America are short 800 million ounces, and every $1 move to the upside is going to cost them 800 million in losses, just under $1 billion, and that's why it's being suppressed. Why they're holding the short position is another question, and that's to keep the illusion alive that really, as long as gold and silver aren't allowed to move higher, gold above 2,000, then it shows that actually we could control the inflation, because silver and gold are a hedge against inflation, more so gold than silver. But this manipulation is absolutely breathtaking. So what will happen is they'll shut the COMEX and the LBMA, and then the price will be able to rise, and this way it stops Bank of America from actually being exposed to unlimited losses, because if we had a nickel spike in the silver, the banking system would fail because it's too big to fail, and it would fail, and then you'd end up with bail-ins around the banks as well. So that's what's underpinning the manipulation of the silver price, and why it's 50% lower than it has than anything else it's never been able to get above its 1979 and 2011 high. Incredible, absolutely incredible. And speaking of inflation, I received this yesterday. We recommend your monthly payment goes up to 208. I've been currently paying, I was paying £95 a month for gas and electricity with Octopus Energy, and it went to 110. The last 2 months I've had to pay 171, and now they want to put it up to 208. And then, of course, that's saying from April, but then there's another 50% to go on this in October. So the price will have gone up by 300% thereabouts from my original payment. So incredible. And not just me. I spoke to somebody else the other day whose bills have gone from £63 a month to 174. So yeah, it's no inflation, and yet silver suppressed. Incredible, isn't it? Anyway, let's move on. We've got just one news item today. We've got the prelim UM consumer sentiment. Just to go back to yesterday on the inflation numbers, the CPI numbers. As I said yesterday, it's not going to factor in the war yet. It's a month behind. That comes next month when we get to around the 10th of April. Then you'll see this spike above 10%, because they'll obviously manipulate it as down as much as they can. But yesterday, the acceleration of the inflation price apparently is 40 years in the making, which is interesting because fiat currency generally only lasts 40 years. So let's have a look at the market's reaction to all of what happened yesterday. We'll start off with the Dow, and we saw them moving the market up. It came down in the afternoon, but overnight they're managing to move it back. We've got a war going on, we've got inflation, and they're still holding this market. It is incredible, isn't it? Absolutely incredible, when it should be falling out of bed. In the 30-minute charts, you can see that we did move to the downside yesterday. Let me just change the colour of this so that you can see it. We moved to the downside. The Dow opened, it shot up, and then the ceasefire came in. The breakdown in talks of the ceasefire here. Market down, and then the plunge protection team saved the market overnight, and now, before the close, and now we're heading back to yesterday's closing price as well. It's incredible. So just keep the market moving to the upside. There is a reason for this, though, more of a logical reason than any sort of manipulation as well. And that is that, those institutions that want to offload their stocks will use the futures market to bring it back, so that when the cash markets open, i.e. here, where it drives up 400 or 500 points, it will bring up the value of those underlying stocks so they can offload them at a higher price and not lose as much on them. So that's another reason behind this. But again, you can see yesterday how they were absorbing all of the sell orders coming into the market with all of this supply. They were just absorbing it so that they could move it to the upside. That's classic plunge protection team, if ever there was a sign of it. And in the German DAX, let's have a look at the daily chart. Similar picture. Yesterday, this one shows the market closing on the lows, because obviously it closed before the Dow, and then the market's been brought up overnight there. So let's have a look at the 30 minutes. In fact, just before we do that and race off, let's have a look at where we are. We've got the 62% retracement on the upside there, and on the downside, let's just redraw. No, we're already actually drawn in. No, we're not. Let's just get rid of that and have a look at the fibs on the downside, and you can see there the market finding support at 50 and 38, and the 5-bar moving average overnight. So very important area of support. In the 30-minute chart for yesterday, it's just dragged the chart over. We can see we had selling at the Wednesday close, and the market moved lower. You can see that there, apart from a bounce here. So we had the retracement, and then it moved lower. Market bounced on the ceasefire. This was an interesting bar as well. I was actually short when this happened, and then I had an internet problem, couldn't get out. But managed to recover the losses by the end of the day. Just hadn't the point where I just got in and they announced some sort of ceasefire. I hadn't had time to get the stop in because the internet went off, but I recovered the losses for the rest of the day here as the market went short, and I'll show you that at the weekend when I just do a quick summary of the trades for this week. It's been a good week actually, but like I've warned, with being short in any of these trades, that if there's a ceasefire announced, and then just to compound it, the internet went off. Normally I put a stop in immediately for that reason, but very frustrating, couldn't get out of the trade because the internet went off, and then when it came back on, I seen the market had moved up. So always make sure you get a stop in ASAP, just in case there is a technology malfunction, as I experienced yesterday. Very rare, never had it before. But just makes you aware that sometimes you've got to be careful. It was all right in the afternoon because the market then fell out of bed, so not a problem if you're short. So yeah, you can see that we had a bit of a move overnight down to the S1 and the low. They want to get the market back above the low, as I keep saying. The EP is the upside target for the futures this morning. You can see it's bullish at the moment, trying to move it up. We're not overbought yet in the stochastics either. Yesterday in the 5-minute charts, it was a lot of activity. As you can see, we sold off from the open. You can see there, then you can see the waves as the market does, and then we were sideways but downtrend. And then when we got to yesterday morning, this is where I got nobbled at yesterday morning as they brought the market back. And you can see there that the market continued down after retracing there again. It was all driven by, talk of peace talks and ceasefires and all the rest of it. And like I say, it's all BS. It will happen one day, but it isn't going to happen yet. He hasn't taken what he wants, etc. So without getting political. So the market rallied off after being oversold here. You can see it churning sideways, rallies, comes back. You've got a classic retracement there before moving higher after the CPI numbers. That's how they drove the market up. And then they said, oh, by the way, ceasefire isn't going to work. And down we came. And you can see that there. Overnight, we just move the last couple of hours. You can see there, absolutely vertical, apart from 2 bars there closing below the 5 MA. But what happens is they find support at the 200 MA. And moving up once more. So we're about 5 minutes away from the kickoff of the futures. They might try and run it up to the close and then a bit of weakness, but we'll see. It depends whether they got to offload some cash positions at 8 a.m. Quick look at the metals. I'm not going to do the currencies this morning because I've gone on far too long already. You can see already overnight they're bringing the price of silver down. Incredible. Yesterday morning they moved silver up. Couldn't understand why, but then when I saw the announcement in the afternoon that they'd actually passed a bill to be able to shut down the COMEX and the LBMA in the event of anything happening with regards to spiking of the metals, that's why it was brought up. You see that in the 30-minute chart yesterday morning, moving up sharply, and then we're now making our way back to the downside. Can't make this crap up. You really can't. Gold, the same, suppressed below the 2,000, should be way, way, way above this. It should be heading for 3,000 at the least. Dollar down as well yesterday, as the metals were finding a bit of support. This contract expires today. We roll over to the June contract. H is for March. M is for June. That will be rolled over today. That expires. Crude oil trying to get back as well. And it's been good news for the gas price as crude oil has come back as well. I'll just give you a quick look at this. You can see there down to 269. We've had a high as we know, of 800. If I can actually get this to show up, you have to go to a candlestick chart, and you'll see there we've been up as high as 800 BTUs there, and down for the rest of the week down to 269, which is good news. Takes some of the pressure off, but it isn't going to stop the increase in gas prices of 50 in April and 50% again in October, and that's without anything else in between. But it's good to see that that is coming down. Takes a bit of pressure off those that are going to be the most affected, which it makes me feel a lot better about, because unlike COVID that affected just a few people, this affects every single person. There's no escape from the hyperinflation that they're engineering at the moment. There is no supply issues. It's just a case of it's being used to create, as the IMF put in their document that I showed you on Tuesday or Wednesday, that hyperinflation is the way to get rid of the debt. And then you see that lunatic Pelosi getting through another 1.3 trillion. But hey ho, there we go. So anyway, we're heading into the weekend, which I am glad about. It's been an exhausting week with what's going on and trying to keep up with events, financial events that is. I don't watch the mainstream news as far as current affairs, etc. Not interested, because at the end of the day, ultimately it affects everybody in the pocket, and that's all I'm interested in, what's going on that side of the coin. Okay. That will do it for this one. Have a great weekend, and I will see you in Monday's Market Alert. So, as ever, thanks for watching. See you in the next one.